Oops, this is not, there we go. Good afternoon, everyone. Welcome to Audits and Risk Management Committee for November 12th, 2025. Could we go ahead and take roll?
Yes, we can. Okay, let's see.
That's what we want to hear, Lauren. Yes, we can.
For the Director of Finance, Joe Stevenshaw, Jennifer Whitaker.
Present.
Whitaker. Sharon Hendricks.
Here.
And I forgot which office you were representing.
For State Superintendent Tony Thurmond.
Yeah, for the State Superintendent, Tony Thurmond, Elizabeth Sanders.
Here.
Thanks. Madam Chair, would you also like to?
Yes, there's just a mistake on the committee list because Ken Tang was re-added to this committee in September.
Okay.
So if we could add him, that'd be great.
Present.
Sorry. Madam Chair,
okay.
you have a quorum.
Okay, great. Thank you. I'm going to just skip to item number 1. Okay. We need to approve the agenda. It's been moved and seconded. Without objection, we will approve the agenda. Consent action item are the minutes. Motion?
Them all three together?
Yes, let's do all three together. 2, 3, 4 for action items. Sharon moved approval. Okay, it's been moved and seconded. Without objection, we will approve those. Number 5 is information. Does anyone have any questions? Or are there any public comments?
No public comment for this item.
Okay, that brings us to action items number 6.
Yes, Crow LLP will present items 6A and 6B together, and they're going to provide you the results of the audit for CalSTRS basic financial statements and other pension information. Management is responsible for preparing these statements, and those will be presented tomorrow at the board. It is Crow's responsibility to provide the board with their opinion as to whether they're fairly stated in all material respects. So I will hand it over to them and jump out of the chair. Oh, or not.
Thank you.
As a new member to this committee, she's leaving now, but can you explain what you just, I don't really understand that process. So I'm new to audit. So there's something Crow's presenting today, and then we're receiving something else tomorrow. The management letter.
Oh, yes, no. What you're receiving today is their opinion on the financial statements and other.
Crow's opinion.
Yes, and then
okay.
tomorrow will be management responsibilities, prepare those, and they will present those statements to you tomorrow. Not the opinion, just the report itself. The financial statements and other pension information.
Why do we, can I just ask that as a basic question? Like, why do we do it that way? Why don't we, to me, it seems like it's important to talk about the opinion, and then why is there a lag, and why is it in 2 different committees?
Either way. So basically, because they prepare the report, they'll highlight aspects of the financial reports to you, whereas Crow's going to really talk about their opinion and items that they feel is important for you to know about that opinion and what work they did to provide that opinion. You want to add anything to that?
I'll just go with the flow.
I'll just touch that. Yep. Yeah. So the board feels, and I agree with this, that sort of the technical aspects of the presentation of the audit results should be resided with the audit committee. This committee is best able to handle that particular aspect of the financial statements. Nonetheless, the financial statements should be presented to the full board at some point. So I hear what you're saying. Hey, are you doing this twice? And to some extent, yeah, there is a little overlap. That's right. But this is in my opinion, the right committee to handle the issues of the opinion and the technicalities, the details that underlie it. And I think it would also be appropriate for the financial statements to also be presented to the entire board and the full board. So, yep, you're right, there's a little bit of overlap, but it's the board's attitude has always been one of err on the side of transparency. And so this is consistent with that.
Can I just clarify? That wasn't actually what I was
Oh.
getting. I wasn't like, it wasn't a transparency issue. It was more like a process issue, I guess, for me. And so, but I'm completely fine. I'll take the ride today. And if I have questions, I'll ask them. Thanks.
Everybody to the left. Pick a chair. Okay, who's starting?
I'm going to start.
Welcome.
Thank you, Madam Chair. Thank you for the opportunity to be with you guys here today. As Dr. Yetman said, we're going to present the results of our audit. We have several prepared slides to walk through those. We've left time at the end for questions and answers, but we're also willing to stop and pause at any point in time that you do have questions, because that's the most important part. With you today, my name is Kevin Smith. I am the signing partner on the audit of the financial statements. With me today is Jen Aris and Dan O'Malley, two of my other partners within the firm who also serve CalSTRS, and Hamza Katan, who is our senior manager on the engagement. I'm going to let them do the heavy lifting because they're much better at it than I. But our agenda today, Dan will go over the scope of audit services, as well as there's a lot of talk about technology in the world today. We're going to talk about how we utilize technology, as well as kind of what might happen into the future, but not to a great extent because we can't predict the future. Hamza will talk about the independent auditor's report and the audit results, really the opinion that you have engaged us to perform, as well as Jen will talk about the required communications with those charged with governance. So a series of communications that the professional standards require that we communicate to you. And then finally, we will end with the byproduct of our audit, which is the independent auditor's report on internal control. And that's performed in accordance with government auditing standards. And again, we'll have time for question and answer as well.
Crow was engaged to perform the audit of the financial statements for the California State Teachers Retirement System, as well as the audit of the other pension information of the State Teachers Retirement Plan. The audits were through the period ended June 30th, 2025. And as a result of our work, we have three primary deliverables: our independent auditor's report, our required communications to those charged with governance, as well as our report over internal controls. Each of those deliverables are included in your board materials, and we will cover those items more in depth on future slides. Our audit execution begins with risk assessment, and we're required to communicate risks that we deem to be significant, meaning that the potential of the misstatement is high due to the complexity and the size of the account balance. So investments and the total net pension liability were deemed to be significant risks. Investments, we identified the valuation of investments to be higher risk, as well as the accuracy and classification. We tested investments by confirming directly with the custodian as well as investment managers, as well as performing procedures over a sample to test the valuation of those investments, as well as performing detailed analytics over the balances, as well as the related investment income. For the total net pension liability, we reviewed the reports prepared by the independent actuaries. We have a subcontracted actuary that assisted with the review of that report, and we tested the underlying data and assumptions that went into the valuation. The auditing standards also require us to have two presumed fraud risks, one related to revenue recognition. So contributions are a source of revenue for the system, and we perform procedures by confirming directly with employers the contribution balances, as well as performing substantive analytical procedures. We also identified investment income as a presumed fraud risk, particularly as it relates to alternative investments, and we performed detailed procedures over those balances as well. We also have a presumed fraud risk of management override of controls. We tested those through journal entry testing, as well as considering the risk of fraud pervasively throughout each of our testing areas. Our timeline was communicated to the board during the May ARM committee meeting, and our work was a hybrid approach where we were both working remote and on site. So we were on site during May and September performing procedures. We coordinated with management to make sure we had adequate space, as well as making sure that staff and management were on site available for meetings with us as we were conducting those procedures. We were on site during the launch of Benefits Connect, and I want to say that management was still diligent in their attention to our audit, and that's why we still had an audit report date of October 3rd, because management was very proactive in making sure that we were getting our audit requests and it didn't slide. And that's why we're presenting the results to you today. Technology is pervasive in everybody's day-to-day life, and it's no different for audit. Whether it's how we document our audit procedures within Insight, how we collaborate with management and exchange information through our Crow Exchange information portal, or perform whole population analytics using Ignite. I'd be remiss to not mention artificial intelligence when talking about AI. It seems like it's brought up on a daily basis by the news or by audit committees or our clients. And AI is something that we're very deliberate about. An audit is not a place to experiment, but we have begun integrating AI tools within our platforms. We began rolling out an AI analyzer and Insight that assists with review of controls. That was after we began our audit procedure, so we didn't incorporate that on your audit. However, it is at the forefront of and top of mind with how we can make use of that technology. I am personally a Crow's representative for the AICPA's Center for Audit Quality AI Task Force. So I'm at the purview of the standard setters as well as our peer accounting firms to understand how they're incorporating AI in their audit procedures. And I can say that Crow's systems are in line with, or best in class with our peers. Technology is not only important for us as auditors, but it's also how a lot of CalSTRS performs their work. So these are the financially significant systems, meaning they produce information that goes into financial reporting. I want to highlight Benefit Connect went live in September. Our procedures were focused through June 30th, so they were not in scope and it was not financially significant for this prior audit. With that said, it will be in scope for our audit procedures in our upcoming audit. So looking forward, at the bottom are kind of our consistent procedures in terms of the timing of our work, where we last month selected our samples for employer audits. We're going to perform procedures towards the end of this month and next month to covering the annual comprehensive financial report. But we've also been in communication with management about how the go live with Benefit Connect is. There's been great two-way communication, and we've been doing that really since the start of that project. But now that it's in scope and financially significant, we're making sure that we're going to perform our test work, and we have preliminary tentative dates of December and February where we'll be looking at Benefit Connect. And then January, we'll kick off our standard audit planning procedures and then perform our traditional interim IT procedures in March through April, and then be back on site for our interim financial statement procedures in May. With that, I'll turn it over to Hamza.
All right, so as Dana showed in the previous slide, it shows us being out here almost all year doing procedures, and all that culminates into about 3 pages of your 75-page financials. So I'll go through our independent auditor's report, which is our deliverable to you, and kind of break it down and highlight the key items within that report. So the core of the auditor's report really is the opinion section and the paragraphs included. This basically states that we have issued an unmodified opinion, also known as a clean opinion, which is the highest level of assurance that you could receive. And that's really a testament to management's diligence and commitment to safeguarding the financial reporting process. The next section I wanted to talk through is the emphasis of matters. The emphasis of matters really provides us an opportunity to add clarity for the users of the financials. So as part of our planning of the audit approach, one of the key elements we think through is the users of the financials and what's important to them. So your contributing entities and your members rely on this, on the information disclosed for the net pension liability. We felt as though it was important to draw their attention to this, as the net pension liability is disclosed within the footnotes. However, it's not presented on the face of the financials. In addition to that, a significant component of the liability is based on estimates and underlying assumptions and variability. So this was kind of our opportunity to add some clarity and transparency in regards to the pension liability. Kind of within that same thought process or breadth of estimates, we've also added a section to address the fair value of investments. And it's really to highlight the method used to value alternative investments. Alternative investments make up a little bit over a third of the portfolio, so a pretty large portion. And that valuation is heavily reliant on estimates and information obtained from your general partners, your advisors, and also subject to management's review, as they don't have readily available market values. And then we'll get into the responsibilities section. So these two paragraphs on this slide and the next really distinguish management's responsibility from the auditors. Management is responsible for preparing and the presentation of the financials. They're also responsible for designing, implementing, and maintaining internal control. And our responsibility is to obtain reasonable assurance that the presentation of the financials is fair and is free of material misstatement. In addition to that, it also reiterates our responsibility to you, those charged with governance, to inform you and communicate any significant items we may have noted within the audit or any significant internal control issues. I'm happy to report to you today that at the commencement of our audit, we did not identify any significant findings or internal control or issues that warrant communication. So no management letter. And then Jen will go over the other pension information.
Thank you, Hamza. Good afternoon. The purpose of the next few slides is to speak directly to a secondary audit report that is provided in audit procedures in addition to the audit over the financial statement. So referred to as OPI or other pension information. This relates to the schedule of proportionate share that's provided annually. And it's important to highlight here that this is not a requirement under generally accepted accounting principles. This is something that management has chosen to compile and issue and have subject to audit annually in order to meet the needs of the contributing employers. And so Crow performs an audit over this information, and the one difference that you would see here in the audit opinion is this restriction on use paragraph. And so really just highlighting for the user that this is not meant to represent the financial activity of the system, but really focused in on those key users, including management, the governing body, and then also the contributing entities and their respective auditors. So in performing this audit, we look specifically at the detail that we'll take a look at here in a subsequent slide, but also focus in on other pension information as it relates to the total net pension liability, and then the deferred calculations related to both outflows and inflows, which again is key information for the auditors of the contributing entities utilized by those 1,800 entities across the state. Consistent with what Hamze had reported, we've also issued an unmodified opinion on the scheduled proportionate share. And this audit report also includes that same emphasis of matter paragraph related to the significance of the use in estimates in calculating that net pension liability or that actuarial information. So here's just a snip of kind of the end of the schedule, if you will. And so really in scope here are all of the contributions from each of the contributing entities along with the non-employer contributing entity. And so specific procedures are performed over this schedule, including even procedures over the 110 employers that we look at on an annual basis. And so again, this information is key for those contributing employer auditors. Included in the footnotes and supplemental schedules here is also the aggregate pension information, which includes the changes in the net pension liability, and so we provide specific coverage over the calculation of these balances as well. So transitioning to the required communications. Please, yeah.
This is just, again, for my education, since
Absolutely,
I haven't sat on
yeah.
audits before.
Yes.
So you're, in this particular report, you're saying that it's not required, but it meets the needs of contributing entities. Can you just help me understand that a little bit better? So that's like our employers, like school districts?
Correct, yes.
And so maybe just help me understand kind of how the supplemental, is it supplemental? So it's not required, but it serves the needs of employers. Can you help me just understand how that's, I know what a regular audit is for CalSTRS. So how does that interface with the regular audit that we do? And tell me more.
Yeah, no, I'll start, and I see Kevin already reaching for the mic. So under GASB 68, each of those contributing employers are required to recognize their proportionate share of that net pension liability on their individual financial statements. And so in order for those management teams, probably in conjunction with their auditors, to calculate the amount of liability to record, the information that's presented in this other pension information or scheduled proportionate share is key for them to perform those calculations.
So they rely on this document, and it sounds awkward, but we request you, or I guess we do this supplemental work as a service to the contributing entities, like just to be helpful and nice. It's not required.
It's not required, but best practice in that if you did not provide this information that was audited, then you would have 1,800 auditors contacting you for information.
Yeah, that sounds fun. Julie, where are you? I bet you that sounds so fun for you. Yeah, no, I got it. Okay.
So it does
Super
save time
helpful.
in the long run. And
Thank
Kevin,
you.
any cleanup?
No,
That's
no cleanup
okay.
whatsoever.
Perfectly explained.
Okay.
Thank you.
Yes. Yeah. Yes. No, great question. Yeah, and certainly keep those questions coming. Keep my clicker going. Okay, so we'll transition for a minute then to speak to the required communications to those charged with governance, or in this case, the Audit and Risk Management Committee. And these are prescribed by the standards. So these are communications we give to every audit arm committee that we meet with. Just, summarizing for you, I think Dan had mentioned that we met with you back in May and discussed the plan scope and timing of the audit. And so we were able to execute on that plan. I think, given that, we're here in November, we have our audit opinion dated in early October. As Dan mentioned, key areas of risk and focus for us and our procedures were the existence and valuation of investments. We spend a lot of time looking at the actuarial assumptions and the data that's provided to the actuaries for their calculations. While not in scope, Benefit Connect was certainly top of mind for us as we were performing our procedures, understanding that one system was coming to a close and, your employees were rightfully so focused on making the Benefit Connect launch a success, understanding, making sure that there was still adequate attention paid to the current internal controls was an area that we were focused on. As I mentioned, we perform specific procedures over the scheduled proportionate share. Revenue recognition is something that we are always looking at in every audit, specifically here related to the contributions that come in from all of those employers. And then again, additional procedures related to the deferred inflows and outflows and that additional information that's utilized by those 1,800 employers. Areas of focus, always are areas where management could influence an estimate or provide additional influence in their judgments. And, as you can see by the results of the audit, we did not find any issues or concerns there. And that really is reiterated here in the fact that we had no corrected or uncorrected misstatements, so no audit adjustments. We have some other communications here to include, again, required by the audit standards, but if the financial information is published in any other way, we're required to be part of that process. Dan mentioned the procedures we're performing this month and next over the annual comprehensive financial report. We had no disagreements with management, no difficulties, nothing that came to our attention. I think we were all kind of prepared for, hiccups, if you will, given Benefit Connect going live in September. But again, your management team, everyone that we reached out to, the doers of the work, everyone was incredibly responsive to us and, really understanding of the need to make the audit a priority. So we're very grateful for that. Certainly if something would have come to our attention, we would have brought that to your attention in advance of this meeting. We wouldn't have had any surprises here today. And with that, the last piece of good news is we are required under the government auditing standards to issue what's referred to as an independent auditor's report on internal control over financial reporting. And I think Hamza stole the thunder that there was no material weaknesses, no significant deficiencies, and we did not identify anything to include in the management letter that was smaller in scope or a deficiency. I think it's important to know that we certainly look at every year as a blank slate and we start from scratch. You can ask your teams. We ask the questions, right? We follow the process through from beginning to end. And so, certainly something that we hold to be of the utmost importance and that we're very much mindful of going into the fiscal year 2026 audit, and that transition in systems will bring about changes in processes and controls. And as the system has been live, we know that there have been iterations, right, and refinement. And so, we're certainly with our antennas up and looking for areas that are either of significant concern that, need to be brought to attention, or areas for refinement and improvement where we could help in the process. So we'll wait and see what next year's results include. And with that, we're open to any questions you may have.
Okay, thank you. Jennifer, then Sharon.
Thank you. First off, congratulations to Julie and her team for year 3 of a clean audit report and no management letter. So good job. And to the Crow team, thank you for returning to the field to complete your audit. I think I've made that comment several times, and I see the value in that. And it feels like it's post-COVID now, where auditors are returning back to the field, where observation is really important, and being able to work directly with the team. And I think that's it's great, and I appreciate you guys being here. I think you said that you were almost here the entire year, so that's great. Thanks.
I guess related. Julie, I think it's a reflection on your team. I know there's a lot of folks behind you and the work that you do. I was curious how long it takes for you to audit CalSTRS. So is it a year? So basically you're done in November and you're going to start again in January. Wow. Okay.
It ebbs and flows.
Yeah.
There are peaks and valleys, but we have literally begun next year's engagement, particularly as it relates to the employers. So we go to 100 to 100. We request information from 100 to 110 employers on average in each year. Do limited procedures there to understand the completeness and accuracy of their payroll, what they've submitted to you agrees to their books and records. That's on a sample basis promulgated by the AICPA. But we're also in the process of doing our risk assessment, and everything is typically 12 months. This year's just going to be more hours, and they're going to see us even more because of Benefit Connect.
So is it fair to say, Kevin, you said 100, is that like about 10%? I don't know if I'm doing the numbers right. 10% of our employers? Or what's the percentage of employers that we sample then? Out of 18? I'm not a math professor.
Somewhere
I'm comm
between,
studies, so
somewhere
I don't
between
know.
5 and 10%.
5 or 10%.
So
And each year we do a different, I assume we use a different sample?
we do
right?
a different sample, and it kind of,
Okay, a little
it
overlap.
follows this methodology of if they contribute, and you don't have any that meet this criteria, but if you had a contributing entity that gave 10%, we would look at them once every 2 years. Between 2 and 10%.
So that's where the overlap
Between
occurs.
2 and 10%, we look at them once every 4 years. Below that, we could look at them once every 10 years. So the ultimate goal is that we will have touched everybody of any significance, and by significance, we kind of make a cutoff if they're cumulatively less than 2%. So imagine how many employers that is. So otherwise, we will have touched every one of them within 10 years. But your largest ones, we would be touching once out of every 4.
Okay. I love the sentence, follow the process. I say that a lot in other circles that I lead in, and it's an important role. So I love hearing that from you as auditors. And I was also just curious if there was anything, Dr. Yetman, I wasn't sure when you were coming in, but if you had any reflections on the report. But I'm just, obviously it's great to hear a clean report is always good news. I mean, I'm always a little, when you get A's all the time, you just want to make sure that there's nothing that we're missing. But obviously that's why we do independent auditing. So yeah, that's all I've got.
Dr. Yetman?
Am I on? There we go. The proportionate share question was an excellent question. It's a second audit. It's a significant part. It's significant to just weight alone of the paper. And it really does a good favor to the school districts, but it's also, because their auditors are going to ask the question, what's our portion of liability, right? And if they have to come up with it, well, so it's a really...
Glad we're doing it.
You're right. It's a really nice part of the audit. I do have some questions of the auditors, if I may. Not a lot. Could you describe for the board the level of cooperation you received from management, and I mean from the very top on down?
I'd put it as best in class from top down. Internal control structures, really, when we think about following the process, it starts at the top. Not to compliment the people that I'm facing right now, but that really is about this committee and the support that they give the C-suite. And then at that level, do they take internal controls seriously? Each member of management welcomes us. They communicate with us annually, or annually sounded wrong, as events occur, so that we're allowed to make recommendations, understand the processes. One of the questions was, if you've received A's every year, it kind of makes you a little nervous. I think one of the reasons of that is we have worked very closely with investments, particularly as they have rolled out the collaborative strategy, to understand how they're evolving and the new things that they're doing. And we're testing things when they're still immaterial. And we're treating them as if they were material. So we're saying, this needs to have this internal control, we would have expected this, etc. So although it's not material to the financial statements at that point in time, it allows them to prepare for that if it is. And they've really rolled out kind of best-in-class documentation of processes as well as internal controls. But it's really about working with management up front and understanding that. We also, and I cringe even saying this, Dr. Yetman, but we probably have between 1,000 and 2,000 data requests in any given year. That is monitored on a weekly basis as to whether or not those are being turned in on time. That's managed by both Crow as well as management of CalSTRS. We typically have very few that are overdue, and if they're overdue, there's an explanation because a third-party service provider hasn't given us this. Your management team works with us incredibly well. I was skeptical is too strong of a word, but I had concerns for this year with the go-live date being right in the middle of our final week. management handled it perfectly. So best in class.
A follow-up question, and I swear I wrote it, but you kind of already answered it. I believe an internal control system, a strong internal control system, is one of the most important things that a company can have. Would you tell the board your opinion of management's, at the very top, understanding of the value of an internal control system?
If we go, as we were walking in, Julie wished us luck, and my comment was, when you're reporting good news, it's always easier. We have not always reported good news to the ARM committee. And again, that's why I wanted to talk about the ARM committee as well as the C-suite, Dr. Yetman. They heard our recommendations, they embraced the recommendations, and they corrected the deficiencies. I think they have a clear understanding of the importance and the benefits that it provides management, and they don't view it as this is part of Crow's audit. It is part of the systems that they have put in place. So they do it the right way.
That's what I wanted to hear. Finally, just two quick questions. Were you at any time denied access to anyone that you wanted to speak with?
No.
Were you denied access to any item of information or evidence that you wanted?
No.
Okay. That's all I got for the auditors. Next, Ms. Hendricks, you brought up, so the sample of 100, that's a great question too. But we also do internal audits of the school districts as well. Now that's not presented today, it's presented at another one, but those are more targeted, looking at very specific items, perhaps overstatement of benefits, accrued benefits. So the school districts, 1,800, that's too many for anyone to audit at any one time. So it's done on a sample basis, just like you heard the auditors do. So the auditors do an independent sample of roughly 100 each year, but we also have an internal auditor who conducts audits, again, of a sample on a risk-based measure. So these two complement each other really quite nicely, actually. Good question. Madam Chair, with your permission, there are some people whose names I'd like to recognize. Would that be appropriate? Yes, please. Thank you. So, the financial statements are owned by management. They belong to management, not these auditors. And so a lot of work goes into preparing these financial statements, accumulating every transaction that happened in the year. Millions of transactions, money in, money out, assets in, assets out. And that has to be formed down into a funnel to prepare a set of financial statements that can be audited. So how does that get done? You just push a button? No, the human beings, right? Boots on the ground get this done. So many of the names you heard before, but here we go. So Art Martinez, every year now, I don't know, 10 years in a row, 20 of them been saying that. Banky Fatunla, thank you, Banky. Wakas Sandik, which is new to me, thank you, Wakas. The whole financial reporting team, actually, that pulled this through. Kelly Marino, always there. The investment accounting team did a lot of work to get this done. And in particular, that the OPI, the other pension information data, the contributing, that's a lot of work. So Anthony Carlos was, no, not Anthony, sorry. That was Kelly. Melissa Duranco and Savannah Martinez, that's from investments. You can imagine investments is a huge part. And a lot of the requests are about investment data. And those two just seem to do a wonderful job providing as you said, some thousands of requests of data and giving it in a timely manner and in a free and expressive manner, as you heard, I think is really important. That culture of saying, yes, we'll give you the data you need, that's important. You need to hear that's important. All right, now finally, here we go. Benefits and member services. That's Anthony Carlos. Thank you, Anthony, for pulling all that data together. And of course, there's many names that we didn't mention. And the ultimate responsibility of those financial statements rests with management, which is the C-suite, which is your CEO and your CFO. And so they, of course, although they weren't in the trenches pulling together the data, they are ultimately responsible. And of course, they should be recognized as well. Thank you, Madam Chair.
Thank you, Dr. Yetman. We don't always know everybody who's working on everything, so we appreciate that as well and all of the hard work. Does anyone have any questions further? Okay, item number 6 was an action item. I would entertain a motion to accept the CalSTRS other pension information audit reports for the fiscal year ended June 30th, 2025, including the independent auditor's report, auditor's communication to those charged with governance, and the independent auditor's report on internal control over financial reporting and on compliance and other matters. So whoever wants to move that, I did the hard part for you. All right, Ken moved it, Sharon seconded it. I think we need to do a roll call.
Okay, Ms. Whitaker,
Aye.
Mr. Tang,
Aye.
Ms. Hendricks,
Yes.
Ms. Sanders. Madam
Yes.
Chair, would you like to? Okay.
And yes, thank
Okay.
you. Okay, that is item number 6. Item number 7, did anyone want to speak to the letter? I think you kind of did. Okay, but it's on here as an action item, so do we need to accept the letter? Yes, Brian? Okay, so I would entertain a motion to accept the 2025 management letter with the unmodified opinion. Oh, it's information? Okay, it says action on here. So we don't need to approve, we don't need to. Okay.
There is no management letter. Yeah, there is no management letter. We have
I
that as a
thought the
placeholder.
unmodified opinion, okay,
Yeah,
gotcha.
yeah.
Gotcha, okay. We are done with that. We are on to number 8. Information items on enterprise risk management report. Hello, Lynn, welcome.
No, to the main
There,
button.
now you are. Wow.
There we go. Afternoon, I'm Lynn Bashaw, your Director of Enterprise Risk Management and Compliance Services. This semi-annual ERM report provides the Audit and Risk Management Committee with an updated view of CalSTRS risk landscape as of September 30th, 2025. As part of the Enterprise Risk Management Framework, ERM staff collaborate with executives and risk champions to identify, assess, and mitigate risks that could impact CalSTRS strategic goals and objectives. The ERM framework supports informed decision-making and organizational resilience by systematically reporting on both recognized and emerging risks. ERM is directly linked to Strategic Plan Goal 3, Objective C, to mature risk management practices. This ERM heat map visually displays inherent and residual risks for each category, showing the effectiveness of our mitigation strategies. These 10 high-level risk categories are actively monitored using an enterprise risk matrix, which informs the ERM heat map and the risk score report. Those are both part of your packet. Some changes for this period include pension fund investment, which is category 1. We increased the inherent risk due to increases in overall market volatility. And in reputational risk, which is category 8, there was a slight increase in residual risk, mainly due to member service expectations following Benefit Connect implementation. We do expect that this will come down as we all become more comfortable and more confident in the new system. And as always, I like to remind you, information security. So that's category number 6. That continues to be our highest rated risk due to increasing sophistication of attacks targeting large organizations, and because their onset can materialize rapidly. The need for vigilance in all organizations' cybersecurity practices remains constant, and our information security team continuously monitors the cyber landscape for potential threats. So that's not a change. That one has just consistently remained high. So I just wanted to remind you. Historically, the pension administration and transformational change risk categories were elevated due to the transition from the legacy START system to our new Benefit Connect platform. Risks in these categories included things like operational disruptions, member service impacts, and data migration challenges. With the implementation of Benefit Connect and the phase out of START, many of the risks originally identified have either been mitigated or have now evolved. In future reporting, you should see the focus shift from implementation risks to ongoing operational risks, such as system upgrades, optimization, and user adoption. Overall, the risk environment is dynamic, but current mitigations are considered adequate for all 10 risk categories. ERM staff also track national and global events such as economic, social, political, technological, to identify any emerging risks for discussion and inclusion in this emerging risk universe map. We update the map after discussions with our risk champions and with our executive team. In this reporting period, political polarization was refined and cyber insurance availability was removed as it remains accessible. Staff continue to monitor for disruptive risks like labor market changes and ideological conflicts. I'd like to highlight some recent accomplishments during this reporting period and provide you with some metrics. Our State Leadership and Accountability Act, SLAY, implementation plan was accepted by the Department of Finance. We had 100% staff completion of our annual enterprise risk and compliance training. All employees are required to take this training. And as part of that training, we conduct a staff survey. We had very positive survey results. Of those that responded to the survey, 92% of our employees that took the survey felt confident managing risks. 91% recognized steps to manage risks, and 92% said that they would report any risk concerns if they had them. That concludes my presentation. Thank you.
Great, thank you. Sharon?
Thanks. That was really interesting. You have an interesting job. Yeah. You said a couple things, so I wanted to make sure. So this is as of September 30th, is that right? 25. Okay. So that's kind of why you're framing it as kind of implementation versus operational.
Yes.
And so we would anticipate we get this every year, correct?
It's twice a year. It's a semi-annual
Twice a year,
report.
okay.
So the next time you'll see it is, the next meeting, I believe, is in March. And so you'll see the report again. And so we will have reevaluated those risks that are related to START and Benefit Connect that we have in the system. We've already started talking about it, thinking about what that's going to look like. Do we want to continue to maintain those in separate categories, or should we move them more into operationalized with a lot of our other things? And so we're thinking about what that should look like and what makes the most sense.
Got it. And then, and honestly, the information security, that totally makes sense. I think that's probably true for every organization right now.
Yeah, it continues to remain elevated, and with artificial intelligence, it is likely to increase even more.
Extrapolates it, to a whole nother level.
Yeah.
But you made a statement. You said cyber insurance continues to be accessible.
Available, yeah, we're able to purchase
Available?
it in the market.
Okay.
There were some concerns initially that we might not be able to obtain it, but we have been able to obtain it. And so legal counsel felt that we could go ahead and remove that from our list.
I'm so curious. I mean, I know I can't conflate that with like homeowners insurance in California.
Right.
I'm just saying, when I hear insurance and accessible right now, it's triggering for me, I will just say.
Gotcha.
I mean, the lawyers know well, but I just thought that was interesting to pull that off when I would say I actually think I'm no expert. I would just say I think that could be continuing to be a risk. So I'm not saying put it back on. I'm just saying I would watch that space. So maybe
I think it's
Cassandra.
because we pulled it off from emerging because it is something that we're actively, emerging is what we see coming up in the environment.
Got it.
When it actually exists in the environment, we take it up from emerging and experience it in real life and
Okay.
manage it directly.
So it's being moved from emerging to what?
It could be moved from emerging into our risk matrix. So that's going to be in that heat map with those 10 categories. There's a lot of subcategories that make up each of those categories that go underneath it. So it would be recognized under there.
That's great, because I think it should be, watch that space. Okay, great. This is really interesting. Thank you. So,
Brian? Oh, you're gone.
I was going to add on the cyber insurance. So what's happened is a lot of companies have seen that there's money in it, and they used to be secondary insurers, and they've now gone into the primary insurance business. So there's actually competition, and the premiums actually have gone down. So the way that they're handling this, there are more exclusions in the policies. So insurance companies are very smart, and they're making sure that they're addressing their losses. But right now, it's a competitive market, believe it or not.
I believe it around that space.
Okay. Dr. Getman, did you have anything?
Just really brief. Ms. Hendricks, it's nice to have you on the committee. I don't think you were on the committee when the compliance function was started. So that's brand new to you. So I just wanted to take.
Heard about it from the
Right, if we may just take just a minute just to, is it the same thing as audits? Is it different from audits? Why do you have both of these? Do they overlap? And the answer is yeah, but no. So maybe, Lynn, like in 1 minute, maybe you can say, my name's Lynn and I do compliance and here's what that is, different from Cheryl.
Yeah, happy to. So a part of my role is enterprise risk management and enterprise compliance services. So enterprise risk management gives you the framework with which we organize and collect all of our risk information and assess our risks. So I'm not responsible for managing those risks. Management is still responsible for managing those risks. I just give them the mechanism to do that. Enterprise compliance, it being a new function under my team, mostly what we do is we do policy management. That's a lot of what we do in organizing and collecting all of the policies that we have. We have over 150 policies that we manage. We don't manage the board policies and we don't manage the investment policies. Those are still kept with the board and with the investment team because they are specialized. We do the policies for the rest of the organization. And so we make sure that everyone is understanding the policies, that they're being updated, that they get education on those policies. And what we do that's different from what Cheryl does and her team is we're considered the second line of defense. We work more closely with management to help them potentially design their internal controls or to test their controls before Cheryl's team gets to them and does an audit. And so we get that benefit of being just a little bit closer to management and helping them with developing things before they actually get the audit. And so that's our role, is that very close knit relationship with management.
Okay, good. Okay. Are there any public comments on item number 8?
There are no public comments for this item.
Sorry, Dr. Getman, were you done? Or did you have anything else? Okay, thank you. All right, thank you both very much. That brings us to number 9, information requests. I don't think there were any. Okay, number 10. Cheryl, did you want to tell us about the next agenda?
Yeah, so mainly next agenda, we'll have an interview for our financial consultant, and then also a lot of work plans that are being developed right now to present to you.
Okay, great.
Sorry.
Go ahead.
For brand new student in the class. Can you just give me like a 30-second on what is the financial consultant?
Yes.
Yeah.
So that's Dr. Yetman, right? His contract's
I don't
expiring.
know. He's a
June
little
3rd.
sketchy. You know those college professors.
Fully agree.
Okay.
It expires on June 30, 2026.
So we don't call you our audits and risk consultant. We call you a financial consultant.
Well, it's a couple
I'm not here to
things.
change your title or anything. I'm just saying.
It's kind of interesting because it is the audits and risk management consultant, but he's considered a financial expert. So that's the term I'm using, I guess, in the RFP.
I have thoughts, but I'll tell you later. I'm just saying.
Okay, final opportunity for statements from the public.
There are no members of the public in the queue.
Okay, the Audits and Risk Management Committee is adjourned. Thank you, everyone.
Fun.